It's Thursday, November 3rd, 2022. A lot to talk about today. Markets just closed a little while ago. Red across the board. Dow Jones down 146, NASDAQ down 181. And with the news that we continue to get regarding this economy, these markets should have been down a lot more. I want to share a few articles with you today and just talk about and kind of recap what's happening in this economy and in these markets. But there was a very, very good article today on the hedge. Central banks are quietly buying gold at the fastest pace in 55 years. I bought some more gold myself today from SD Bullion. I have a link down below if you need a reliable source to buy precious metals. SD Bullion, link down below. I've been using them now for 4 years. Have nothing but good things to say. If you have a place that you buy from them. If you have a pawn shop, a coin dealer, another dealer online that you feel comfortable with, I think this is the time to be stockpiling precious metals, back up the truck. Nice pullback in the metals today. And this is a time to be loading up on this stuff. This is not financial advice. I'm not telling you what to do. This is what I'm doing. This is what people around me are doing. We're taking advantage of the sales. I think this is what the smart money is doing. When they are purposely crushing these metals markets, the smart money is going in, backing up the truck and buying this stuff, just like the central banks. And so, I looked on the SD Bullion website this morning. I was talking to Aaron from Texas Silver. If you want to see another really good channel where a guy who I think is sincere and as honest as they come, my good friend Aaron, Texas Silver, check out his channel. But he checked out SD Bullion this morning and said, you cannot believe how much silver is being sold and gold. And I saw this. I'm reading this article about what the central banks are doing. I had to buy some more gold today. Silver is not a bad buy either. It's on sale. SD Bullion. If you go to their website right now and look at silver bars from 995 ounces to 1,024 ounces, they're completely sold out. Many silver coins are sold out. Many of these gold coins are sold out. Random year gold buffaloes were sold out. I bought a 2022, and premiums are going up, and they're going to continue to go up. Look out for the BRICS nations. I think we're going to, at some point in the future, see some digital currency backed by gold, and it's going to be used by the BRICS nations. And I think that's going to be the future. The BRICS nations will be the future of money. Central banks, according to this article, please read it if you get a chance. Central banks have been accumulating gold reserves at a furious pace, last seen 55 years ago when the US dollar was still backed by gold. Central banks bought a record 399 tons of gold worth around $20 billion in the third quarter of 2022. Now, that might not sound like a lot of money, but if gold goes up to $5,000 an ounce, $10,000 an ounce, if the BRIC nations go to a gold standard and they begin to back portions of a currency by gold, could be the yuan, could be a new digital currency, we don't know. Could be $40,000 an ounce, $50,000 an ounce. If you think gold is going to remain under $2,000 an ounce for the rest of its life, you are sadly mistaken. Gold is going to have its day. Silver will go along for the ride. The Turkey Central Bank was the biggest buyer at 46.8 tons. So what do they know that most people don't know? I think that they know that the dollar is on borrowed time. This system is on borrowed time. The world reserve currency is on borrowed time. That gold is going to have its day without a doubt. And so this is why I continue to buy it, gold, silver, and put the stuff away where it's safe, where you can access it. I think we're going to see some amazing events take place in the next few years to come, and this is the time to be preparing. Here's another one from the hedge. New car loan rates set to hit 14-year high as affordability crisis worsens. Average annual rate on an auto loan right now, 6.3%. That's in October. Now, yesterday, the Fed raised the Fed rate 75 basis points. So we're going to see that rate go up. Currently, if you want to borrow money, On a used car, the average rate you're going to get is 10.33%. Average cost of a new car is $40.4 thousand. That's 27% more than it was in April of 2019. The average American no longer can afford a new car or a used car. And we have a serious affordability crisis taking place here in America, and it is going to get worse. Yesterday, another 75 basis points. December, going to be at least 50. Could be another 75 basis points. And that means that it is going to cost more money to borrow money. To finance anything, it is going to cost more money. And the average person now is tapped out. And we're going to see people filing more and more bankruptcies. They're going to be evicted out of their apartments or their rental properties. You're going to see people foreclosed on their mortgages. This is going to affect their credit. It's going to be very, very difficult for people to borrow money on top of the huge cost now to borrow money. So if you have wrecked credit, forget about it. It doesn't matter what the interest rate is, you're just not going to get a loan. If you have good credit or decent credit, you're going to be paying a much, much higher interest rate for about anything you finance. Amazon pauses hiring for corporate workforce. This on CNBC. You know it's getting bad when Amazon is cutting or pausing their corporate workforce jobs, and on top of that, closing down or stopping construction of some of their warehouses. Millions of square feet of Amazon warehouses have been canceled. Another one from The Hedge, Stripe firing 14% of employees to slash costs during recession. This is a payment processing company, and we are continuing to see the tech industry absolutely slaughtered. Operating costs too expensive, they said. So what are they doing? Just like everybody else is doing. They're going to trim the fat, and that means they're going to continue to cut jobs. Lyft cuts 13% of workforce. CEO Logan Green and President John Simmer said this: "We are not immune to the realities of inflation and a slowing economy." Yet we're being told every day that it's not that bad, that the economy's just doing fine. Jerome Powell from the Fed yesterday said the economy's doing good, that the consumer has a lot of money in the bank. This couldn't be farther from the truth. Shares of Lyft have fallen 68% year to date. And the market, Dow Jones only down 146 points today, NASDAQ down only 181. Give me a break. Still, a lot of manipulation in these markets, but they're having a very, very difficult time manipulating the economy that has already collapsed. Peloton crashes on weak holiday outlook. All of this free money that we saw over the last couple of years, just propping up this fake economy. Fake money, fake economy. People sitting at home getting government checks. Were able to order these $2,000 and $3,000 Peloton bikes. They had free money and they had free time to use these things. Well, now people have to go back to work, and now people don't have money. Stock of Peloton down 73% year to date. How long will they be around? Again, we have witnessed a fake economy, and we've witnessed a massive, massive bubble, multiple bubbles. And as you all know, all bubbles eventually pop, and these bubbles are now beginning to lose a lot of air very, very quickly. Housing market next. The housing market, this is going to be awful when people begin to realize that that wealth that they thought they had in their house begins to disappear. It's going to be like air coming out of a balloon. It's going to come out very, very fast, and people are going to be upside down so fast in these homes. And when they lose a job, or a spouse loses a job, as they continue to fight inflation to keep their homes, keep the cars, keep the standard of living, they're going to lose. They're going to lose. This economy is in big, big trouble. And again, these markets should have been down a lot more today. They should have been down a lot more yesterday. The Fed came out yesterday, I thought, extremely, extremely hawkish. We are going to lose against inflation, ladies and gentlemen. The Fed is not prepared to deal with inflation. Inflation isn't 8.2 or 8.3%, it's 20%. We are not going to fight inflation with 50 or 75 basis point rate hikes. They are ill prepared to fight inflation, and I believe we will lose this war against inflation, this fight against inflation. And this is why it is so imperative, in my opinion, to own gold, to own silver, because at some point inflation is going to take over. People and businesses are going to realize it. And at that point, if you don't have precious metals like gold and silver, you're going to be a sitting duck. A very interesting article on Fox Business today. It's more bad news and it's reality. These people out there that used to write me daily, telling me how wrong I was, how wrong you were in the comments. People, your friends, your neighbors, family members, all told you you were wrong 2 years ago, 3 years ago, 4 years ago. You weren't wrong. You saw exactly what was happening. I don't have a crystal ball. I don't pretend to sit here and be a prophet. I don't sit here and tell you, oh, I told you this, I told you that, I was right, that person was wrong. This is really a group effort. I read as many comments as I can. I talk to a lot of people, and I try to really just be plugged into what's happening. And by doing so, you can get a pretty good idea of what is happening in this economy. And many of you have been right over the years, and that's why you prepared, and that's why you continue to prepare. But when you read stuff like this coming from Fox Business, small business owners say inflation is crushing their business. It's out of control. 37% of small business owners were unable to make their rent in October. I mean, think about this number. 37% of small business owners could not make their rent last month. If that doesn't tell you all you need to know right now, how bad this is, this is extremely concerning. It's tragic, and it is a reminder to you and I why we must continue to prepare and get ready, because it's going to get much, much worse. The final chapter of this economy is going to be epic. It's going to be biblical. We're going to see catastrophic times because of what is happening right now. It's warning you right now, reading this data, of just how bad it's about to get. Small businesses make up 99% of all businesses in America. This is the backbone of America, and 37% cannot make their rent. So we have a real bad combination here. It's called inflation, and it's called crime, and it is destroying small businesses across America, and it's tragic, and it's really, really sad. And it's going to get worse, and it's going to take an extreme toll on this economy. And think about the amount of jobs that are supported by small businesses across America. Inflation to dampen holiday spending, retail trade group forecasts. This on CNBC today. What a surprise, what a shock, right? A year ago, consumers shopped early and spent more to secure gifts as stores struggle to keep shelves stocked amid shipping delays. Well, what a difference a year makes. This year, retailers are drowning in inventory as consumers go broke. Where are they going to get the money this year? Half the consumers that spent last year during the holidays haven't even paid off their credit card debt from that spending spree, and it's a year later. And they think about that. Half the people who spent last season haven't even paid off their debt for last season. And how are they going to spend this year as their savings has been tapped out? They're tapping out their credit cards, and many people will be foolish, and they will extend that credit card debt and go deeper into debt. Complete foolishness. Don't do it, ladies and gentlemen. It is not worth getting deeper into debt. This holiday season is going to be a rough one for retailers, businesses, large, medium, and small. The Targets, the Walmarts, the Kohl's, all of them already huge sales, discounts at these stores right now to tempt you into those stores to spend money that you don't have. And if you do have it, maybe you shouldn't be spending it on a big screen TV or video games or things you don't really need. Maybe it's time to make sure you have some precious metals, make sure you have some cash put away. Even better yet, getting your present debts paid down and paid off. That would be the best thing to do. The hedge. Economically, ignorant Americans want more stimmy checks to fight inflation. Good article on the hedge. This was a Newsweek poll. 63% of respondents say that the Fed should issue stimulus checks to tackle inflation. So this is the answer. Let's print more money to cause more debt and more inflation. People aren't asking the government to fight inflation. They just want Uncle Sam, the government, to hand them money in order to mitigate the pain. Nobody wants to feel the pain now. The pain is going to be severe, ladies and gentlemen. The people that sat at home, didn't work, took a check, went out, bought a new car, bought an RV, took extravagant vacations, filmed those steak dinners, those $25 cocktails, filmed themselves floating in the pools at a nice weekend getaway. People buying, the $2,000 handbags, the Rolex watches, just having a great time. They didn't think the party was going to come to an end. Well, the music has come to a stop, ladies and gentlemen, and the piper is going to get paid. There is no way out of this. The Fed has nowhere to go. They pivot, they don't pivot. This is going to end very bad. The Fed pumped $3 trillion into the economy after the 2008 crisis, while they pumped nearly $7 trillion during the health crisis. In 30 months, they pumped nearly $7 trillion into the economy. And people didn't expect this to happen, along with 0% interest rates, along with 2.8, 2.9% 30-year fixed mortgage rates. And they didn't think anything bad was going to happen while they were buying mortgage-backed securities, while they were buying into the stock market. And now people wonder why it's going to get painful. There's no way out, ladies and gentlemen, no way out. This is why you and I made sacrifices a couple years ago. We began 2 or 3 years ago to make sacrifices because we were able to begin to see the avalanche forming. These people that sit there and say, I've been talking about this for 3 years. No, actually, I've been talking about it for much longer, because I saw that after the 2008 crisis, nothing got fixed. They put a Band-Aid on a gunshot wound. And I began to see, just like many of you, began to see the snow coming down on the mountain, forming a massive avalanche. And it took years and years and years. And now we have this gigantic pile of snow on top of the mountain, and it's beginning to break apart. And it is going to wipe out everything in its path if you are not prepared. And people just thought that because we talked about this for 2 or 3 or 4 years, and I've been talking about it since 2008, that it just couldn't happen, that, sooner or later you'll be right. Well, economic bubbles don't just occur overnight and pop. They take years, especially these bubbles, because these are the biggest bubbles in history. And this has now taken 14 years to get where we're at. But to think by just ignoring it over 14 years or over the past 4 years that it would just go away by ignoring it, that it didn't exist, that's complete ignorance. Many people saw this over a decade ago, this avalanche forming, and now it's beginning to break apart, and most people are completely unprepared. And all they want to do is criticize, judge, and lash out because they're unprepared. Well, here's something I advise those people today. I'm going to give a little life advice today. Instead of criticizing me, judging the audience, judging people in the comments, judging people that you know who were right and called this, instead of wasting your time judging other people for being right, what you ought to do is take that time and use it to your benefit by preparing. Go out and get prepared. Stop crying, stop judging, stop attacking people. Take this time, valuable time, and time is one of the most important assets that we have. Take the time and get prepared, because I don't want to see you fail. I mean, you can sit there and ridicule me, judge me, troll me, whatever you want, but I don't want to see you fail. I want to see you survive. And so take the time, the precious amount of time that you have right now, and stop judging the people that were right. Again, the people in the comments, maybe it was your neighbors, maybe it was friends you know, maybe it was family you know, maybe it was me. Stop judging us and go get prepared. Another article today which just reflects this economy. Homelessness has risen 70% in California's capital, that's Sacramento, 70%. Again, another reflection of this failing, collapsing economy. See, you don't have 70% homelessness in a booming economy. You don't have that in a first world nation. This is more common in a third world nation, nations that have collapsed. And by the time they tell you that we're in a recession, we will be in a Great Depression. There's no way anybody's going to tell me right now that the economy has not collapsed. When you look at the homelessness, when you look at the data, when you look at the amount of layoffs that are occurring, when you look at what's happening with the volatility in the stock market, there's no way anybody's going to tell me that it hasn't already collapsed. So I remember people every day would write in the comments and go, when's it going to collapse? When's it going to collapse? And I would respond, it's collapsing right now, right before your very eyes. Wake up, stop being ignorant, take a look at what's going on. Maybe you have a job today, so you don't think it's collapsing. Take a look at what's happening around you. But people have blinders on. If it's not affecting them, it doesn't matter. But then all of a sudden, this thing called inflation hit, and people began to get affected by it. And then more layoffs. And before you know it, that same person who would write something like that, he got laid off, or his wife got laid off, and now they're behind on the mortgage payment. Now the repo man's looking for the car, and now it's not so funny. The same people who used to judge when we would go out and feed the homeless people and talk to homeless people, those same people now may be the same people facing homelessness right now. They may be one of the 70% in Sacramento that are homeless right now. So don't judge, ladies and gentlemen. Any one of us can be put in a very, very bad situation overnight. The BBC, Bank of England, expects the UK to fall into the longest ever recession. It warned the UK that it would face a challenging 2 years with unemployment doubling by 2025. Incredible. The Bank of England just raised interest rates the most in 33 years. I believe they just raised, correct me if I'm wrong, 75 basis points. So I'm going to leave it there today. A lot to digest. Just an incredible time. Reading some of this data, reading some of this news, watching some of the news today, watching the markets, more volatility. Look, tomorrow it could be up 500 points. I don't know. But given the data, given what's happening in jobs now, what's happening in tech, what's happening now in housing, what's happening in retail, how in the world could the markets even be up tomorrow? There's just no way I see markets being up tomorrow unless we have some sort of manipulation where the Fed is coming in and buying back in. These markets should be absolutely getting rocked right now, crushed right now. I don't think it's time to buy the dip. I think we got a long way down to go before we start talking about buying the real dip. But we'll see what happens tomorrow. Again, good news or bad news is good news so many times in these markets, and you still have a Fed that I believe is in these markets, maybe a lot less than they were, but as the Fed is stepping back a bit, we're watching these markets really have trouble. So again, we'll see what happens tomorrow. I would not doubt to see markets really get hurt tomorrow, but there's still a lot of manipulation taking place. But if these markets were really free and unmanipulated, they would be getting crushed today, they'd be getting crushed tomorrow, and we would see a free fall taking place in these markets. And we will eventually, because the Fed at some point will lose control. And at that point, all bets are off. Everybody's on their own. You are only going to own what you hold. Think about that. You will own what you hold. Anything on a computer screen is in jeopardy. It is at risk. Stocks, currency, bonds, all of it. Unless you own something physical, you don't own it. I'm going to leave it there today. I'm beginning to ramp. We'll see what happens tomorrow. It doesn't even really, in my opinion, it doesn't even matter what the markets do. What matters is what's happening in the economy, what's happening in your economy. You need to be your own central bank, prepare to deal with your own economy, your own economic headwinds. Get the debts paid off. Make sure you have precious metals. Make sure you have a cash reserve. Make sure you have a mental mindset. Prepare across the board, ladies and gentlemen. Today is another reminder of where this is all going. We're going to see big, big trouble coming.